Hi guys, welcome back to another video, and to today's video, I've got a complete different video for you guys. Today's video is all about swing trading. Recently, I've taken a huge interest on fundamental analysis and swing trading. If you guys didn't know already, I normally am an intraday trader. I'm not really a session trader. I like trading, I like scalping. These are the main things that I'm doing in the market. But recently, I have developed a fundamental strategy and a swing strategy, which I'm going to be implementing for the new year. But this is an example of an A+ setup for me on my swing trading. And yeah, I'd just like to break it down for you guys, so you guys understand what I'm looking for in the markets, how I do my fundamental analysis, as I feel like on YouTube there aren't many videos out there that are really simply around fundamentals. I think a lot of traders, YouTubers hide away from saying about it because they think they're going to lose the audience because it's too complex, but I'm going to try and break it down as simple as possible, just using things like COT reports and basic knowledge of, economics. So if you guys didn't know already, I trade liquidity, supply and demand. This is an exact setup that, everyone will be looking for on the 30-minute time frames, the 5-minute time frames, and I'm on the daily time frame at the moment. I'll be doing my swing trading analysis on the weekly and the daily time frames. As you can see in gold, we are clearly bullish. We've been bullish since the start of the year. Since COVID, gold has been going absolutely crazy. So yeah, I'll be loving to take buys on gold. It is a bullish instrument, has been for the last few years. So I'll be looking for buys, ideally. So here we go, we have a fake out on this area of demand here, where you can see buyers and sellers fighting for price here, and then we see price coming down to this lower area of demand, and we see this wick off, bearish wick off here. And what do we know around the 28th of October that tells me that I'm actually going to be looking for a buy here? How do we know that this demand zone is going to be respected? Well, if we bring up the COT reports, this is what everyone loves to say is smart money, trading with the banks, but nobody is actually trading with the banks on YouTube. This is the real way you can see data on what the institutions and banks are doing with their trading. So by reading these, you can see, are the banks buying or selling gold? So I want to be actually trading with the banks, and this is me being serious. I'm not just, you can't say you're trading with the banks just because you swept liquidity or anything like that. No. This is how you trade with the banks. So what can we see? Well, first of all, on the 28th of October, right around when price taps into my area of demand, we see a lot of buying coming from the banks here. And what do we see on selling? A lot of the banks are cutting a lot of their shorts and they're putting all their eggs into longs. As you can see, we go from cutting 24,554 longs on gold to adding 12,000 longs on gold. So we've come from a bearish sentiment to a bullish sentiment just in this week, from the 21st of October to the 28th. So this tells me that the institutions are adding longs onto gold. They want gold to go up, If we see the retail traders, they've actually wanting gold to go down. They're adding to their shorts, they're cutting their longs and shorts and adding to their shorts. I hope this makes sense to you guys, but if you can see that the net position is positive here and their net position is negative, the banks are wanting gold to increase, but the commercials, the non-retails, the non-reportables, the retail traders are wanting price of gold to go down. So when we see this, we see gold. When the banks see this, they can see this data as well. So they want to use retail liquidity to look for longs in the market and create these huge moves like we see happen here. So what do? I would wait for price to come down. We also know on the 29th of October, the Fed released that they're going to be cutting interest rates by 25 basis points. What do we know by simple economics? Well, if the Fed, the US government, are wanting to cut interest rates, that means the US dollar is going to get weaker. And we are trading gold, so we're trading it against the US dollar. So we want gold to increase in value and the US dollar to decrease in value for a buy on gold. So that is very important. Gold is a safety investors look to buy gold when the US dollar is struggling. This is how economics work. This is what investors are looking for. So when they see a weak gold, when they see a weak USD dollars, they're buying things like silver and gold and other more of these risk-off investments. This is what happened in COVID. When we saw currencies decrease in value, we see gold increase in value. We see silver increasing in value. We see property increasing in value. These are risk-off approaches for investors. So after the 29th, what do we see? We see a huge movement in price. This is very, very bullish news for gold. Now, what would I wait for? Well, I would enter just on this huge candle because my risk to reward is not going to be very good. And I would have to target this highs. And this may take months for price to come and do this, which means fundamentals may change, US dollar may strengthen, the gold may weaken, and we may see price now come and drop off. We don't know. We can't predict the future. So what we would rather do is go down into the 4-hour time frame. So here we'll wait for, now we're just waiting for a retracement. We see this break of structure on the 4-hour time frames. We see this pullback, and what you can do here is bring out your Fibonacci retracement tool to this level here, and then enter off something like the 0.86 level, the 0.71 level, this golden zone. This is the best entry for pullback, or just anything below at the area of equilibrium at the 0.5 level here. You could also use things like the volume profile tool. You can drag this out like this. We can wait till we go to the POC. You can enter off things like low volume nodes. Lots of different ways to get into the market. We have low volume nodes here. We have this whole area is we can enter off a low volume and get into the market there. And then what would I do? Well, I'd wait for some sort of confirmation off an entry like this. We see a lot of buyers coming into the market right here, or just off this entry, and then I'll be aiming for these highs for a 1 to 3.41, and then we would have to wait. This is the thing with swing trading. You will have to wait some time. I'll speed this up, and price then comes in at this area here. And if we go back to the COT reports and go to metals, we go to previous metals, and then we go to gold. What can we see on the 4th of November? We can see, we see our net position staying positive, which is good. We don't see a large drop off in gold. So, we're still bullish. That's what we want to be. We just want to be monitoring the gold. Unfortunately, around this time was the shutdown, so the COT reports were not being released. So it was much more difficult to do swing trading for a lot of traders. And we sort of get stuck at this equilibrium where the change in shorts and the change in longs are equal. But we still see a lot of shorts getting taken off the market as well, which is what we want to be seeing. So that is basically my strategy. At the moment, I'm looking at USD CAD today. We see a lot of CAD selling off by banks at the moment. And we see, hopefully after this FOMC, which will be released tonight, we can see that we have some bullish fundamentals for the USD dollar. So we can see the USD dollar increasing in value compared to the Canadian dollar. We have our same area of demand, which we're looking to aim off. We had this very nice bullish move, but I did wait for some more fundamental USD news to come in my favor before entering here. So yeah, this is what I'm currently looking at. But if you guys, I'm sure you guys have a lot of questions about swing trading. If you do, leave your questions in the comment section below, or join the free Discord, which is completely free. It's also going to be in the description. And yeah, if you enjoyed the video, smash the like button and subscribe. And I guess I'll see you in the next one. But thank you.